NIO is one of China's newest and fastest growing electric vehicle manufacturers. It was also one of the most talked about electric vehicle manufacturers during the summer and fall of 2020. NIO is currently producing 4 different vehicles. There are 3 SUV models with an average driving range of up to 600 kilometers, and there's also a sports car, and it's one of the most fastest electric sports cars in the world. In 2021, NIO will also be releasing its first sedan to help it better compete with Tesla and other Chinese electric vehicle manufacturers. NIO was the first Chinese electric vehicle manufacturer to go public on the New York Stock Exchange back in August of 2018, and it was backed by Chinese powerhouse companies Baidu and Tencent. A couple of years later, it was followed by 2 more Chinese EV makers, Li, which went public in July of 2020, and Xpeng, which went public in August of 2020. After all 3 of these Chinese EV makers were listed on the stock exchanges, their stock prices went parabolic during the summer and fall of 2020, and investors could not be happier. But a couple of recent headlines called into question the meteoric rise of these companies. First, Tesla announced that it was going to lower their prices to help it better compete in China. Then short seller Citron Research issued a bearish call on NIO with a $25 price target. And then the U.S. House of Representatives passed a bill that could possibly delist all Chinese companies within 3 years. And because the EV sector was so hot and the stock prices soared over the last several months, they said, "Show me the money," and issued more shares. First, Li issued more shares at a steep 10% discount. Then Xpeng issued more shares. Tesla also got into the mix. And then NIO issued more shares as well. This had a very negative impact on the share prices for all of the EV companies. And as a result of these events, I decided to take a look at some very basic, fundamental, and technical analysis to find out if this is a good time to buy NIO. So, full disclosure, I do not have an open position in NIO, but I have day traded NIO a lot in the past. Also, full disclosure, I currently work a full-time job as an accountant. I would like to quit my job by the end of 2024, and you can help me do that by clicking the subscribe button. Now back to NIO. On November 13th, short seller Citron Research issued a bearish call on NIO with a $25 price target as a result of intensifying competition from Tesla and other Chinese EV manufacturers like Li and Xpeng. After the report came out, NIO's stock dropped from an intraday high of $54 to an intraday low of $40. That is an incredible 25% intraday drop. But a few days after the report was released, NIO hit a new 52-week high of $57. Now, since that 52-week high of $57, NIO has been in a bit of a downtrend, which included a 10% gap down on December the 2nd after Li issued more shares. And on that same day, the U.S. House of Representatives passed a bill that could delist all Chinese companies within 3 years. Despite that 10% gap down, NIO closed very strong that day. It opened at $40 and closed at $48 after it reported that it sold almost 5,300 cars during the month of November. Now, since that close of $48, a new resistance level could be forming at $48. It has approached $48 several days after that, but with the exception of this one day, it has not closed above $48. It did close above $48 here, only to turn back around and close below it multiple times after that. Now, this doesn't mean that NIO will never close above $48, but this $48 level is something to pay attention to in the short term. Now, despite the most recent downturn in the stock price, NIO has had an amazing run in 2020. Its 52-week low was back in March, and it was $2.11, and the 52-week high is $57. That's an amazing 2,600% return in just a short amount of time. But as of the close on December the 24th, NIO is down 20% from its 52-week high. Now let's take a look at some basic fundamental ratios of NIO. NIO does not have a PE ratio because it has negative earnings. Now, NIO's price to sales ratio for the trailing 12 months is not only trading above the industry average, but it's also trading above Tesla, which is the industry leader. And its price to book ratio is also trading above the industry average and above Tesla again. This could indicate that NIO's stock price is a little bit pricey because it's trading above the industry leader and it does not have any earnings. From a profitability standpoint, the gross profit margin for the trailing 12 months for NIO is well below Tesla and the industry average. And its operating profit margin is in the red in addition to the net profit margin as well. Having these negative ratios while trading above the industry average and the industry leader could put more downward pressure on NIO's stock price until it trades at a ratio more applicable to its earnings. So based on the downward pressure indicated by the technical analysis and the overvalued fundamentals, I have to rate any investment at this point in NIO as high risk. Now, this doesn't mean that NIO isn't a good company to invest in, but the analysis and the increased competition from current and future EV manufacturers could mean that NIO stock might head lower in the near term. So if you're thinking about opening a position in NIO, be careful of your share size or wait for a pullback. In the meantime, good luck with all of your investing. Thank you for watching, and I'll see you in the next video.